Let's see when it lets us go live. All right, it is telling me that we are live. So let me just open up a private window, see if I can see myself. That's not an important squawk. See if I can see myself, and then we will go from there. So if there is anybody watching, please do feel free to say hello in the chat, in the interactive chat. We're going to go ahead and get started here shortly. I'm going to cover some of the news that came through during the US session, some of the drivers, and yes, we are live. Perfect. All right, so some of the drivers that came through during the US session, we'll have a quick gander at that, and then from there, we will basically have a peek at the equity markets. And I'm going to show you a bit of a different view today that you're used to seeing. So I just got to make sure that screen is in the right place, and we can go from there. Perfect. So welcome welcome all to today's midday YouTube update. My name is Mark, and I'm one of the head traders here at TRADEPRO Academy. Not the head trader, one of the traders. The head trader title goes to the illustrious George Papazov. He is the illustrious head trader here. We are just mere traders. So let's go ahead and get started. Georgie covered a lot of what happened overnight. Your main drivers were, I'm just going to summarize quickly, your main drivers overnight were that UK Parliament took control of Brexit legislation from PM Johnson, meaning that they could bring forward a bill seeking to delay the UK's exit date. As you guys might be aware, Mr. Johnson is quite set on leaving on October 31st without a deal. And that's fine. So that's what we had there. The fact that they took control of Brexit legislation means that he's going to have a lot more of a difficult time, and this is likely going to lead to general elections. Also, a big boost in the equity markets overnight came from Hong Kong. Hong Kong leader Lam formally withdrew the extradition bill. And I believe the Hong Kong index was up around 4% as I was coming into the office this morning, which looks pretty good. Yeah, Krister, appreciate that, man. So that's what we had overnight. In the U.S. session, a couple of squawks came through. We had ISM or August ISM New York manufacturing came in at 50.3 versus 43.5 prior, which was a 4-month high. Also a bunch of Fed speak today, this morning. Another reason why it's super important to have a new squawk on. We've already seen a speech out of FOMC member Williams, and we also saw from Kaplan as well. I don't have the notes from Williams, but we do have from Kaplan, who is a dove, a non-voting dove. So, you know, generally when a FOMC member is a non-voter, they like to think that what they say can rile the markets up, but the fact that they don't have any actual votes means that, you know, it's kind of just fluff, whatever they say. They're kind of just told what to say by the Fed chair. And he did say it's not surprising that factories are weak when trade is weak. Consumer has remained strong, so it's a mixed picture. That's cute. And we also had Atlanta Fed cutting the Q3 GDP growth to 1.5% from 1.7%. All right, so cutting the growth prospect by 0.2% means the economy is not doing as well as anticipated. We also saw Bank of Canada, not really a driver on the U.S. markets, but Bank of Canada left interest rates unchanged today at 1.75% as expected, and we are seeing a nice little sell-off on the back of that. For our FX traders, that was the setup we were looking for, the US dollar CAD short. It's been about 5 weeks now in the making, and today finally it's looking like it's starting to resolve to the downside. So hopefully some of our traders are on that. And outside of that, that is basically all of the drivers from the U.S. session. Into the latter end of the session, we have FOMC member Bullard speaking at 12:30 p.m. Bullard is a voting member. All right. So as a voting member, Bullard is speaking, delivering opening remarks along with Governor Michelle Bowman at an event hosted by the Federal Reserve Bank of St. Louis. Okay, so, oops. So Bullard is an actual voter, which means that what he says is important. So at 12:30, in about 15 minutes or so, you're going to want to have a new squawk handy. I do imagine there's going to be some volatility around this simply because he is a voting member, and if he does say anything that might rile up the markets, we could see some volatility. To be quite frank with you, it's been pretty dead today. Really after the news announcement, just a slow grind from about 10:30 up until where we are at this point in time. All right. So that is a squawk. He's not squawking anything important, which is okay. I'll just ignore it. Outside of that, we still have the U.S. Beige Book at 2 p.m. All right, that's a low impact event. Not really going to see too much volatility on the back of that one. However, we also have FOMC member Evans speaking, and FOMC member Evans is also a voting member. All right, so what Evans says and what Bullard says, that is going to hold a lot more weight to what Kaplan said, because Kaplan's not a voter. So keep an ear out for any squawks with regards to that. That's coming in at 3:15 p.m. FOMC member Evans is scheduled to deliver opening remarks at a conference on North American trade hosted by the Detroit branch of Chicago Federal Reserve Bank. Audience questions expected. All right, so in this case, he's going to be speaking on American trade. So I think FOMC member Evans, his speech is going to be a little bit more important than Bullard, who is simply delivering opening remarks at an event hosted by the St. Louis Fed. All right, so that's what we got for the remainder of the day. Hi from Roni. Hello, Roni. Hey, Shane. By zero. Hey, Francisco. Hey, Talib. All right, guys, so that's kind of where we're at. And now that we've taken a look at the drivers, we know what's coming in through the remainder of the session. Let's jump into the charts. And let's give you guys a look at the technical landscape here. So let me get off of myself, get the camera back on the charts. And you might notice that this looks a little bit different than the usual YouTube template. That is because I'm using my actual trading template here. And giving you guys a little bit of a behind the scenes for those of you that might be watching. That have been watching for a little bit, you'll know that our screens generally, you will see these types of charts. However, this is what the full order flow screen looks like. This is one of my charts for S&P 500. In fact, that's S&P, that's S&P, that's S&P, and that's S&P. So if you have questions, that's great, because those questions will be answered in the webinar tomorrow, which is available to non-TradePro subscribers. What you got to do is you got to register for that, and you'll get a link with a reminder. Today, usually you'll get it the day before, which is today, and then you would get another reminder 1 hour before the event at 8 a.m. Eastern time. All right, so this is kind of what our setups look like. And what I'm seeing right now, first and foremost, just taking a look at the quote board, is that we have a lot less volume on both of our assets today than we did yesterday. In fact, yesterday at the U.S. Cash Open by 9:30 a.m., the SPOOS S&P 500 had around 680,000 contracts traded. We're at around 1225 right now, and it's only 805,000. So you can see a little bit of a volume drain from yesterday's session. First day back, a lot of institutions are going to get back, and as this week progresses, there's a lot of high impact events, mainly this Fed speak. You've also got NFP on Friday morning, and you also have a speech from FOMC Chair Jay Powell on Friday afternoon as well. Okay, so first day back, you can expect that. The fact that we've got a pretty full agenda this week out of the U.S., in the first week back, you're likely going to see a little bit of a transition coming into the end of this week. And then after this week, we'll likely be back on the, full jets, running with the full volatility, hopefully, is the way that it's going to go. So that being said, crude, or rather S&P 500, 800,000 contracts trade on the session. Crude oil, this one was around 790,000 contracts at this point of the day yesterday. We're only at 485, so a little bit less volume on that front, which is okay, because tomorrow, the reason why we picked tomorrow is because we have the EIA inventory report tomorrow out of crude oil. And so that's usually a good mover in those markets. We like to trade that as a team. Generally, it comes out every Wednesday, but the fact that Monday this month or this week was a holiday and markets were closed, and that gets pushed back to Thursday. So you guys get a treat tomorrow. If you do sign up for this, you get to trade the crude oil report with the team and see how we do this on a weekly basis. All right, so that's what we're looking like on both of these assets. Daily change percentage, pretty bullish for crude. It is really bullish, actually. The previous day close came in at 53.95, and our last traded price is $56.19. So nice rally on that one, just based on looking at the daily change percentage. Don't have to guess too much what the right side is today. It is the long side on that front. SPOOs, daily change percentage, relatively flat, up 0.88%. Again, previous day close was this pink line here in the 84s, and we're up at the, hold on one second, that doesn't seem right, 28.94. Oh, 29.04. Sorry, 29.04. 20. Yeah, that makes more sense. All right, so it is a little bit up on today's session from yesterday's session, but that has nothing to do with the U.S. Cash Open. Majority of those gains, as you guys can kind of see on the charts, were a result from the Globex session. So Globex session, big run up. U.S. session, a little bit of a dump. Now we're kind of recovered right back to the open, pretty much sitting flat from where we opened the U.S. session at. So not too much going on there. However, based on the higher time frames, I like to look at the daily charts here and there on these equity markets here. And what I am seeing on the equity markets is that the upside is looking like the right side here. I do think there's a good amount of buy stops sitting above the 2940s, and I do think that is ultimately the target for this week. If the SPOOs can get back above those 40s, I think we're going to have a nice run. And something else that's kind of confirming that is when I slide up my ladder here, which is showing me where the orders are kind of sitting at. You're seeing 817 right at those 40s. That's kind of the biggest level that we've got for the next little while. All right, so that is considered resting paper. That has been on the DOM since around 8:13 this morning, and the fact that they're still up there, we're about 10 points away from that level. So I do think we can reach into it if we do see some nice volume coming into the close. And we'll show you guys what we're looking at as far as levels in just a second. So that's what we got with the quote board. Let's open up the S&P 500. So S&P 500, you guys can see we are above the R2 at the moment. R2 is at the 28 quarters, or rather 28 halves. R3 is at the 4150s. And you can see we've got two levels of offers sitting on the chart right now. We've got some offers sitting at the 35s, 610 of them, and 817 at the 40s. All right, so what I am seeing here is on the 10-tick chart. All right, we've highlighted two swing highs. There's one, there's two. The market's broken above both of them. All right, so now what we're looking for, rotations back down into the open. Kind of want the open to hold these 30s. Doesn't necessarily have to be here. I'm okay with it coming down into the opening range low here around these 28 halves. The main point being we've broken above two swing highs. Now we're looking for a rotation for a continuation back up into those overnight highs just above these 35s, around those 36 odd somethings. All right, so that's what it's looking like. And based on that, the markets, we've kind of started the day off with a bit of a short bias, and the market kind of quickly proved that wrong. Around 10:30, we started seeing really this Globex VWAP. I personally took a trade up there, scratched it for 2 ticks because it started not working out. And that was kind of the transition moment there. I think I tried one more somewhere up in this region, and after that didn't work out, scratched it again for 2 ticks. We kind of jumped off of the short end and just waited for these swing highs to be broken, which they have now. And so at this point, switch bias back to the long side, and we're just watching this open here around these 30s to hold out. This guy is something that many of you will likely not have seen unless you've traded with an institution or for a prop firm. These are your footprint charts. All right, so based on what I am seeing here, we did have some pretty good volume on this move up. Right around these 30 halves, and a nice big buy and balance right in there. So right around this region is where I would be expecting support, at least a first level of support to come in, right? And we are seeing that with this little rotation up. That it's caused a rotation. Now we're kind of flirting around this level. Only thing I'm not liking at this point in time is the aggressive sell imbalances. Granted, we have come after a pretty nice run, formed some structure, couldn't really trade into these offers at the 35s, right? And we were seeing in the trading room, in the elite room, that there was a bunch of bids sitting down these 31 quarters, and they seemed to run away from the market every time it rotated back down. Every time it came down into these below these 32 quarters, halves, you would see these guys get off of the ladder, and then it would rotate up again, kind of like what you see here. They would jump back on. So that's what a spoof kind of looks like, trying to spoof the market higher, and got filled. Now we are seeing a bunch of sell imbalances. So sellers are still well in control. However, once we start seeing these buy imbalances starting to come in on rotations, that might be the transition signal. And you know, the level that I'm kind of liking a bit more than these 30 halves is right around these 28 3/4 to what is that, around 27 3/4. A lot of point of controls here, a lot of volume traded on here on this move up. I could see us rotating here, getting some buyers excited, flushing their stops into this support, you know, anywhere between this low and this VWAP, and then forming out some support, kind of like what you saw here, for the continuation to clear out these offers and to make a run up into those overnight highs at the 56 quarters. So that's what I got on S&P 500. That's kind of what I'm looking at into the close. You know, overall, pretty bullish now that we've broken above those two highs. If we get back below the open, you know, not really too concerned. If we get back below the VWAP, however, back below these 26 halves, I think the long side is done, and we're likely back in a range, at which point I wouldn't really recommend doing anything at all. All right. Joseph, hello, and my pleasure. Appreciate you being in here. Krister, thanks for the support, buddy. Happy you're enjoying it. All right, so that is the S&P 500 market. Let me scroll off of that and bring crude oil into play here. All right, so this is crude. And crude has been on an absolute tear today. All right, an absolute tear. We opened up right around 55.10ish or so on the U.S. Open, and it's just been a bit of a grind higher. You know, not the cleanest grind higher, but you know, a grind higher is a grind higher at the end of the day, and it's just been following the same kind of price action. Is it'll make a new high, kind of consolidate, make a new high, consolidate, breakout, make a new high, consolidate, breakout. So what I would not be surprised to see is kind of something similar to this, to be honest. Now that we've broken to a new high, some more consolidation for continuation higher. I am seeing offers here in the 56 halves, 56 70s. So I think upside is still the right side. Let me take a look here at the pivot charts. Here's your pivot charts, and we are coming into some key resistance here on crude, right around the 56.80s. So we are above R2. 56.80s is what I'm watching for as a next resistance, and R2 is 56.14 or so. So we'll watch for 56 to hold any rotations as support, and then get a pop back up into those 56.80s. That's kind of the play that I'm watching for. On the footprint chart, what does that look like? Well, this is what our footprint chart looks like. All right, our footprint chart kind of looks like this, and 56.50, you can see there's some good offers sitting up there. There's around 182 of them up at that level, and then back up above, you're seeing a big cluster of offers right around the 68s to 70s. And just looking at this here, you know, this is the heat map. You're seeing between 68 and 70. You've got a couple hundred offers sitting up there. So that's kind of the level that I'm looking for this market to get into. The real question is, how far back do we go, or how much of a dip do we get before we get there? All right, and so what I'm seeing here is a couple of levels of interest. Naturally, here you had a bunch of buy imbalances, a little thin spot, 0 by 190 printed. That should be a pretty good level to hold for rotations, right? So as it comes down in, look for that level to hold rotations in order to try capturing something for a run to those 50s. If not, a little bit more conservative, if you're more like me, I'd probably be waiting down around this R2 here. Just seeing, if I zoom this in a little bit more, right? Just seeing the fact that we held this level, you can see held it quite a bit on these lows, more lows before the run up. I think anywhere between these 56.20s down into these 56.14s may also offer a pretty good little location there to pick some up for a move back up to the upside. All right, so that's kind of what I'm watching for on crude oil as well. And that is basically a wrap on today's update as far as analysis is concerned. What I will do now is I will show you guys the TradePro Performance TradePro Performance Index, excuse me, if I can find it here. All right, so let me get rid of those notes. TradePro Performance Index, and there is the performance index. All right, so as you guys will be well aware, we are all about transparency here. And good days or bad days, there's always something to learn. And today happened to be one of those bad days. The market started off with some direction, but really around 10 o'clock, you had to hit it early. If you kind of stuck around and you tried getting additional moves after that 10 a.m. dip below the VWAP, it's quite difficult because it was a slow grind higher, and I imagine that is kind of why we did end up on the lower end of the scale today. Only 47% of the group was positive today. Granted, again, this was signing off around 11 a.m. So 30% up, just under 17% flat, and the majority were down on the session, 52.83%, which is okay. When we have these kinds of days in the room, we often ask what was the cause of it, and as you might imagine, impatience, kind of trying to jump into trades as a result of getting stopped out, were some of the main ones this morning. All right, so that is okay. The main goal here as traders is ideally making money, but your main goal is to be able to come back tomorrow, to have margin in your account, so that you can come back tomorrow, and tomorrow might be the day that you have the day of your year. So the main goal as traders is to focus on risk management, protect your capital, and to ensure that you can be back tomorrow, because tomorrow might just be the opportunity that makes your day, makes your week, makes your month, or makes your year. All right. So despite these numbers, what I do know about trade pros is that we are a very, very resilient bunch, and often days when we get results like this on one day, the next day, more time than not, I think there's only been one case where we haven't bounced back with almost double what that result was. All right, so I'm really, really looking forward to tomorrow's date, looking for the trade pros to bounce back. And that's basically where I'm going to end this off on. Hello, George. So I'm going to throw this back onto myself here. The camera's back on me for a couple of moments here. I'm seeing there's around almost 30 of you guys watching right now. And so this is kind of your last chance, if you will, to get in on the trading pass for tomorrow morning. We do have a limit as to the number of people that are able to join, and we are really approaching that limit. In fact, we've got a couple of emails that people didn't receive their links, and so we had to go in and we had to upgrade it. All right, so even with the upgrade, we are near the top end of the limit. And so tomorrow will be a good chance to kind of see what we're doing. I gave you guys a little bit of a sneak peek what my setup looks like, and generally what it looks like is basically myself, George, or Victorio sharing our screens, walking you through real time, order flow, looking at the offers, basically a little snippet of what I gave you guys today. That's essentially what we do with the community every morning from 9 a.m. till 11, and then we do it with our elite team from 11 until 12 or so. All right, so that's basically that. Just wanted to let you know that is going to be your last chance. We don't do this often. I believe the last time that we opened up the room to YouTube was about a year ago. So this is not something that happens often, and we highly, highly recommend you take this chance to really check it out for free. You know, even as is, if you do sign up, there is a 14-day 100% money back guarantee. So if you sign in, you check out the day trading room, you check out the courses, you don't think it's a good fit for you, you can request a refund. You can cancel your subscription and request a refund within those 14 days, and you'll get 100% back, no questions asked. You know, it's not really about the money for us. Obviously, we do have to get paid for the value that we do provide. However, you know, keeping somebody that's going to be more problems than not, that's not a good fit, it's always best to, you know, to go apart and stick with people that are good fits. And so that's what the model is like. So, you know, as is, it's already risk-free because you get it. If you don't like it, 14 days, 100% money back guarantee. However, we went one up on that, and we're giving you an extra risk-free opportunity here. All you have to do is just sign up for that registration link, because it's a registered webinar, and it's a excuse me, it's a private webinar. So while it's going to be on YouTube, if you don't register for it with the link, you will not be able to see it. All right. So that is basically a wrap from me. Let me take a look at the chat. I'm kind of losing my voice here, looking at the chat and see what's going on here. So we've addressed the majority of the people. JM, thank you. You're welcome. Joseph, only been trading for a bone. Can't wait for tomorrow to be able to see how it works. Yeah, Joseph. Well, that's good. The fact that you've only been doing it for about a month is also pretty good. Oftentimes, when we get traders that have been doing it for a little bit of time, we usually have to spend a little bit of time focusing on unwriting and rewriting positive habits. A majority of the time, traders that have a lot of experience, you know, whether it's 6 months to 3+ years, and they've been consistently not profitable, usually there's some bad habits and some psychology issues that go along with that. And until we can rewrite those habits with the correct ones, we'll have to break the original ones, rewrite them, and then you'll find, you know, not to say you'll find success, but generally people tend to find success after rewriting those habits. In your case, where you've only got about a month of experience under your belt, there's not that many bad habits that you've had time to build into. All right, so being newer is actually beneficial as far as your learning curve. So, you know, whether it's a month, a couple months, or you're an experienced trader, I think everybody will find value in that room. So I highly, highly, highly encourage you guys to set that up, and we'll see you in there. I will post the link as a comment to this video. That will be a pinned comment on here. So if you haven't had a chance to sign up already, I'm going to throw that on there shortly. I sign off on here. Also, what you can do is navigate over to our website, TRADEPROacademy.com, and you will get a pop-up which you can click more info in order to sign up for that webinar. All right, so that is going to be me for today. Thank you guys for joining. Appreciate you guys, and hopefully we will see you in the room tomorrow. Like I said, it's going to be about a once-in-a-year opportunity. Don't really know when we're going to do this again, so I highly encourage you to check that out. All right, until then, good luck and good trading. Like I said, I wouldn't really recommend doing too much into the remainder of today's session, as I don't see too much happening unless, well, is it Bullard or Evans say anything really, really special. So that being said, good luck and good trading, guys. Hopefully we'll see you in the room tomorrow. If not, we'll see you back on here on YouTube. All right, take care, everyone, and we'll see you then. Ciao.